George. I want to welcome in our next guest. That's Jeff Pierce. You guys know Jeff well. He's the Senior Manager of Derivatives Trading at Charles Schwab. Jeff, we're matching here on this Thursday. Good to see you, my friend. Let's talk Oracle. This was a lead story for me yesterday on Market on Close. This broke about 15 minutes before the show started. OpenAI buying some gigawatts from Oracle as Oracle's become a big-time player in this cloud infrastructure space.
And it's really starting to show through over the last couple of months. I mean, if you look at the chart, a very slow start to 2025, trading around $118 in April. Now we've seen them rally of over 30% in June, seeing the stock trading above 230. It's been pretty incredible, and it is because of these sort of stories. OpenAI, as you pointed out, going to lease about 4.5 gigawatts of computing power from Oracle. We know it's part of that Stargate project, which includes Oracle, OpenAI, and SoftBank. They're proposing investing about $500 billion to build out data centers in the U.S. and globally. As we look at kind of what Stargate's been gone through and some of the hype around it, if we look back in January, President Donald Trump formally announced the Stargate project. We've seen the venture continue to include more and more spending. And this comes after Oracle has already said that they signed a multi-large cloud service agreement that they're expecting to contribute more than $30 billion in annual revenue starting in fiscal 2028. They didn't announce the client, but Wednesday, Bloomberg reported that the Stargate agreement would make up at least part of this. Again, an incredible run from a database software company now going into cloud. We're seeing a lot of revenue. Cloud was up 24% in fiscal 2025 for Oracle. We're seeing that revenue really jump. It's about now if they can continue to compete against some of the big names.
And when you look at this, the stock's doubled from the lows, Jeff. It's just incredible. We're not talking about, a startup company. We're talking about one of the bigger companies on planet Earth that almost had a legacy stigma to it. Well, maybe you want to take that off. I said this the other day. It caught me off guard, but it's joined my watch list, and my watch list got names like Palantir on it. So I put it in that camp almost now, which to me, I mean that, with love. I mean, if you're on this list, you're a moving stock and you're one you got to pay attention to in my mind. Jeff, final thoughts on this move we've seen in Oracle. Did it catch you off guard?
I mean, it did. I mean, they've been transforming this business, and there was a lot of concern, like what you mentioned. But now when you're seeing expectations for cloud infrastructure revenue to grow 70% during fiscal 2026, when we're seeing, the kind of spend and return that they've gotten from cloud, up 52% growth in cloud infrastructure in Q4, I think there's a reason behind the hype. I think investors have to be worried about the spend. A lot of CapEx there. Of course, that's going to put some pressure on gross margins. But overall, the optimism, I think, has been strong for a reason, and it's showing again today with today's story, or this week's story, I should say.
Good stuff. Jeff Pierce, Senior Manager of Derivatives Trading. You enjoy the long weekend, my friend. We'll catch up here soon in the coming weeks. As we say goodbye to Jeff, we welcome in Joe Tigay, Portfolio Manager of the Rational Equity Armor Fund. And Joe, you have the fun job of looking at a stock that's doubled over the last, 3 months or so and trying to figure out how to trade it. Certainly in the momentum factor now. First, what's your thoughts on Oracle given this move? And then we'll get into your example trade.
Yeah, thanks for having me. I was just on the Big Three on Tuesday, just 2 days ago. I was saying, boy, this has come a long way over a short period of time, and I was still bullish on it then. I'm still bullish on it today. My trade on Tuesday was some sort of call diagonal. I called it a poor man's covered call strategy. Similar trade still outlook today. I'm very bullish still on cloud. Looking at Oracle, everyone's talking about this AI cloud that Oracle is mixing up with Amazon and Microsoft in, and there's just a huge market to tap into here. Yes, Microsoft and Amazon have the lead, but it doesn't even matter. People are growing so much in their companies like OpenAI that might not want to partner up with Amazon and might want a different partner. And Oracle's filling that void. And I think this deal with OpenAI is really important. Yes, they got a $30 billion deal. Yes, that's huge. But I think it just sets them up for their next layer of growth in the cloud. They can make a bigger margin on the smaller customers. They can just build out their data centers right now as they're doing so. So I think this is just fantastic news. In the midst of a great bull run for the stock market, AI obviously is leading the way, and I think it's really exciting to see all this happen.
Joe, I love the call out too of not only are they, working with some of the bigger hyperscaler companies that they have been for decades, but they have an offering that's accessible to small and medium enterprises. It just expands their potential, business market share tremendously. They're competing on price pretty aggressively with companies like Microsoft as well. And they all just integrate also well. All these companies, although they're competing, they just work together well also. Talk to us about your example trade. You said just a couple of days ago you had one. Obviously, if it was bullish and the stock continues moving higher, that one's probably already working for investors. But for those who didn't see that segment or are watching you now, how has your opinion changed, and has it?
Yeah, well, I love the upgrade in the price. I think that's a big important spot for me. I think maybe by year end, that'd be fantastic to see 275 as a new price target for Oracle. Currently around 232, a little bit higher, give or take. So yeah, I'm just looking at that. Looking by year end, 270. I don't think I need any more than that for Oracle. So just looking, how can I get into the name? A little less risk than buying the stock outright right here. And I'm just going to say, I'm going to look into August, buy the 230 call for August, sell the December 270 call. I actually can collect money to do that. Now I'm going to need it to move higher throughout August for this to be profitable, because I'll be stuck with that December call if it's not, and I'll have to look to buy another call against that. So very short term, looking for more upside, more momentum to the upside. Now that gives me some time, of course. I got more than a month here on this trade. If we do get a pullback in July, it wouldn't be a big shock given how great the market's done lately. So if I do get a pullback in July, I still got time to recover here in August. Mid-August, August 15th is when that 230 call will expire. So I'm going to need it to be above 230 by August. I want to have that stock in my account. And then essentially, I just got a covered call here, short the 270 call in December, looking for it to run up to 270. That'd be the best case scenario.
Joe, for those who are not necessarily professional investors like yourself and are self-directing their account and they see that unlimited risk associated with this one, do you make an adjustment, buy a way out of the money call to cap that risk, or maybe make it something that could be done in an account without that level of options approval, or how does one adjust that to make it a little bit more accessible?
Yeah, that's a great point. Right now, I'm covered with the August call. If August runs off, I don't have that call anymore, and have to buy another call to make sure that I don't have that unlimited risk on. Absolutely, a way to do that, of course, is just buy an upside call in December. Just make sure that I'm stopped out. If Oracle does run away, you can buy like the 300 strike in December for a lot cheaper. But right now, I am covered in this August strike. Got that protection. That's great. But yeah, for people without portfolio margining, it is a little tricky. Does have potential runaway risk. So I gotta be on my toes. Got to make sure I'm adding a call after August runs off here.
Thank you so much. You enjoy the long weekend. We thank you for joining us here on the shortened day. Record-setting day, though, on Wall Street. That's Joe Tigay, portfolio manager of the Rational Equity Armor Fund.